Hello, good morning. This is Captain Singru, and I had made a video on 22nd of October about the head and shoulder pattern, the neckline of which was breached by Nifty on 22nd October. In that video, I had mentioned that after this neckline breach, we were entering into a bearish or bear territory, and Nifty was going to fall after this to certain levels which I had indicated in that video. Now I got a lot of appreciation from you people, a lot of love from everyone, saying that whatever I had predicted has actually come through. So in today's video, but I also got many questions regarding as to when I think is the reversal is going to happen. And the second question which everyone asking is whether it's a good time for us to buy the dip. That means when the stocks are falling, is it a good time for us to average them and put our more money into the stocks? So what I want to say here is that we should not add any more money into our existing stocks, or should not buy any stock till the time we actually get an indication of a reversal. So how that indication of reversal is going to come, that is something which I want to discuss in this video, so that we can profit from, though our portfolios are going down, we all are looking at losses which are now for most of the retail investors who had put in their money majorly into small and mid cap. There are already losses which are going more than 20%. So people are in the 20 to 30% category. So it's not a very happy state of affairs. So in today's video, I would like to discuss the scenario wherein the reversal is going to happen, and what would be a good strategy for us to buy that debt, put more money into the market with some assurance. So to start with, I will draw the head and shoulder pattern once again, which I had drawn that day. So this is the chart on Zerodha which I have taken, and on this we will go up and draw this pattern, which is now all of us are familiar with. So see, this is what has happened on 22nd. Somewhere here, if we see the date here, 22nd October, we had if you see the date below, we had a breach of the neckline, and Nifty has started falling. Now, if you recall, I had given two targets that day, which are typically the result of a head and shoulder pattern neck breach. And the first target, which comes is equal to the level of the fall from the head to the neckline. So if I draw it here and put this arrow at the breach of the neckline where it was breached, and draw a horizontal line here, I get the first target, which now is coming to which is showing as between 2300 to 23100. So this level is coming to at 23045. So this is the first target. We had also discussed that typically if there is a strong push upwards after the Nifty has broken, or the chart has broken the neckline, if there's a strong resistance or support while the chart is coming down, so typically there are chances of a reversal from the halfway mark also. So if I see from here, if I come down, I am looking at a level of somewhere around 6.5% or so. So typically the halfway mark would be somewhere around 3.25, 3.2 and thereabouts. So if I come here, I get a level of 3.2, which I have marked here. So when I draw a horizontal line at the halfway mark, somewhere here, I find this line coinciding with this particular, the low of this candle of 05 August, which is 23,893. So if we go by the support based system also, so this trend line, which is going to act as a support, is where the first halfway mark of the Nifty after neckline breach is coming. So there are chances of a reversal happening at this point also. And chances are pretty strong because right now it's October, it's a festive season. Diwali is a few days is going to come now. So in all likelihood, and October is generally the month when we haven't seen the markets falling too much in the past. So what I am expecting is that we will indeed see a reversal somewhere here, and markets will tend to go up, and thereafter, depending upon the strength we gain, we will continue our onward journey. The rally will start again, or we might come back again to beat the second target, which is somewhere here. How it is going to transpire, and what indicators and signs you are going to be looking at, that's what we want to discuss now. So now let's say if Nifty, I'll remove this arrow from here for clarity. So let's say if Nifty turns from this particular line, which is drawn here, that might happen tomorrow itself. Nifty can fall up to this level, and thereafter we can see a reversal happening and Nifty going up. So one thing we can do is we can draw a line which is coinciding with the neckline of head and shoulder, a line which is something like this. Because as we would see further, this line is also going to act as a strong resistance for the Nifty on its way up, right? So for better clarity, I'll remove this head and shoulder symbol from here. I'll use a better tool for the better clarity, which is let's say a path. So we are going up. I'm drawing the head and shoulder once again. We came down till here, went up again till this level, come down here, went up again to form the right shoulder, came down. Now we're saying that this is the target level we want to come to. What is going to happen after this? So in all likelihood, like I said, we should see a reversal from here, and Nifty should start moving up like this. On its way up, we are going to find a resistance somewhere here, and thereafter, like I discussed the first scenario, from here we see a reversal once again downwards and hit the target, which is there, which we have seen the final target of head and shoulder, which is around 23,000 mark. Now, so when the Nifty turns from here, there is a swing trade possibility which is existing here. That means somebody buys the stock at this level when the Nifty has touched the bottom and is going up. There is a possibility that we will make profit at least till the time Nifty reaches this level. So this particular level is actually a rise of about 2 to 3%, and depending upon the market move that time, there can be a bigger rise which might come in certain small and mid cap stocks. So there would be a good possibility for you to reduce your losses here and book some profits as the market reverses and the stocks start going up. But now again, coming back to the same question, when do we know the market has actually reversed? Because one more possibility which is going to exist here is that Nifty doesn't indeed go up here, but it comes and does something like, something like this here. That means it is just wasting some time here at this level, not breaking it decisively. Keep doing this, and thereafter it might come down, like this. This is also possible. Something like what happened, let's say, like in this case here, if you see, at this level, Nifty has spent enough time. So market was kind of sideways before it went on top. So there it can go sideways and it might come down. Because I feel that if it has to go up, it should go up without wasting too much of time here. It should go at least up to this level and come down. But if it is wasting time, if it is not able to go from here, the chances are it will break down again. Maybe after Diwali it will come down and touch this level. Okay. So now we'll go and see. Now we try to see. Now we'll as to what is the indication that Nifty has indeed shown a reversal here, so that we can buy the stock at that level and catch the swing when the market is reversing. So for that, there are three indicators, three things rather, which I'm going to use. Keep it very simple. I will not be using too much of too many indicators here. But to validate my point, I might take the help of certain other indicators as to how they are also indicating a reversal. But what I am going to see primarily, what I see primarily are three things, which I'm going to discuss in this video. The first thing which I see is RSI. Second thing I see is MACD, and third, of course, I see the price action. How I'm going to show to you in just in a while. So for that, we'll go back and see some example where the Nifty has indeed reversed. Okay, we can take it, let's say here itself. Now, if I remove these two lines which I have drawn earlier, we'll go to some bigger reversal. Nifty has actually reversed after a big fall, so it'll be better moving across. Okay, so let's say we take this point here, where Nifty had fallen to this level. If you see, this is also a typical head and shoulder thing which happened here, in which the neckline would be something like this. Right? So the neckline broke. So maybe it didn't come to all the way down here, but it took a support here and went back somewhere after the half mark. So we'll take this point and see how the reversal typically happens. So when a reversal has to happen, the three things will eventually typically happen. One, you would see a breakout of the trend line which is being formed on the RSI. So for that, I will just go up here, and this is the trend line which I'm talking about. So see here, the trend line has broken out and gone up. You would see it happening in the RSI. So for better clarity, I will draw this point here, mark this point through a vertical line where the trend line breakout has happened. So you would see that at this point the trend line RSI would give a breakout. Second thing you want to see is soon after this breakout, there will be a PCO, a positive crossover, which will happen in case of MACD. So first thing is, remove this and we will try to put something else for better clarity. So this is a circle here, okay? So I'll draw it slightly smaller. So first thing which we discussed is RSI giving a breakout. Second thing which is happening here is MACD. Okay, it will not go up. I have to draw separate. MACD giving a positive crossover. And third thing which I have to see in the price action is that some kind of bullish engulf has to form on the price action. So those of you who are aware with the candlesticks would know what a bullish engulf is. So one engulf has actually formed here, right? There are any bullish engulf here, but the better one is somewhere, let's say here, which is happening at the time of when there was a breakout of the RSI. So we'll find a kind of a bullish engulf happening here, wherein the positive candles actually surpass the red candle, and then we started seeing the market going up. So bullish engulf is, and here also if you see one example is here, a bullish engulf is happening here. It's very clear. Here it happened after in a second candle, maybe a third candle. Here the bullish engulf happened straight away after the fall, which is here. So this candle, the green candle, has actually engulfed the red candle. At the same time, you would find MACD also did a positive crossover, and like we discussed earlier, the first case RSI has also given us a breakout at this point. Again, three conditions: RSI breakout, MACD giving a positive crossover, and a bullish engulf happening in the price action, the candles. So when these three conditions are met, then and only then, I would suggest to people to start putting your money into buying the stock again. So if you see it from any other angle, from different perspectives, one can maybe I am looking at these three things. Somebody would draw maybe a trend line here. Somebody will draw a trend line here, and he would say, "Oh, there's a breakout of trend line, so time to buy." I am saying these three conditions. Somebody can simply see a trend line and do it also. So similarly here, when we look at Nifty, what you can do is you can draw a simple trend line here. One of course is this trend line, which is touching the two lows, and the second can be a slanting trend line, which is starting from here, going down, and you would see that after this trend line is broken, you would break this line also and go up. So more or less the similar kind of results you'll get from both the trend lines here. And like I said earlier, this was the line we're discussing from where the reversal is going to happen. So now, if the reversal has to happen, we have to see three things here again. First is going to be, like we discussed earlier, uh, breakout of RSI. Now let's see where the RSI right now. If I draw a line from here, so RSI is very close to giving a breakout, it seems. You know that it might break out anytime. So that will be a good indication. But if you see MACD, right now MACD is some distance away from a reversal. Like if you see this gap here and this gap here is almost same. So if let's say from here it reverses, it will still take around 2 days, 2 or 3 days of action for it to reverse. So that means we can expect some 2 or 3 days of action here, in which MACD would start reversing from this point, and then we have a breach of this particular trend line here, RSI breaks, and then we get something like what we discussed earlier. A pattern in which we are seeing the price action moving in this manner. Coming down and then breaking this line and the breaking line and moving upwards. Right? So this is the pattern Nifty is going to show. So this indeed becomes a very good level, somewhere around 23,900, from where a reversal can happen. But like I said, be rest assured that you take fresh entries only when these three conditions are met. There is a bullish engulf happening here, trend line is broken, there is a RSI trend line breakout, and of course there is a PCO, a positive crossover, which is happening in the MACD. Once that happens, you can be rest assured that Nifty will go up at least till this point. And you have to be very careful here. And if you find any chance of reversal here, now instead of a bullish engulf, you see a bearish engulf happening, then you can come out. You can see a negative crossover, NCO, happening in MACD. And here also you would see the RSI breaking down instead of breaking out. For example, here if you see, you would see a break down of RSI somewhere here, right? It happened. Thereafter the RSI came down. So you will get the indication for the way up as well as for the on the way down. You might have to develop some time, some eye for this before you start seeing these patterns and these kind of reversals, on the charts. So this is a typical swing strategy which you would employ after Nifty has given a reversal from this point, and that is the time when you can get into some of the stocks. You can buy some stock here and look for some profits near future. Now, if Nifty reverses, first of all, there is going to be either a halt here, Nifty going to waste some time here, then come down, or there's going to be a rise like this, a rally like this, and thereafter the Nifty would maybe breaking down and coming to the level we discussed, which is here. Now, I am not saying by any means that this is going to happen exactly in the manner which I told you, but this is the most likely scenario. And like I said, this is a time when you can use your knowledge to buy into the stock and try to minimize your losses or try to gain some profits. So thank you very much. This is for the video today. And like I said, remember the levels which I told you, 23,900 likely to be achieved, met on Monday or Tuesday itself. And second level of course is 23,000. Now there are many things which can happen. Somebody asked me a question that it is for sure that Nifty is going to turn after 23,000 level. Answer is unfortunately no. Why? Because uh, I don't want to go there as yet. There's too much of speculation and too much of fear mongering. But I just want to give you a hint. Uh, no, structures like head and shoulder is not something which is fixed. It's a dynamic structure, right? And structure is forming, it is evolving as the price action is moving up. It is only giving you target indication of target levels. It doesn't tell you necessarily that after the target is met, Nifty is going to reverse or Nifty is going to come down further. So that would depend upon the market conditions that time. You might have some positive news coming in, you might have some bad news coming in, you might have something happening. कोई ना कोई बहाना बनकर Nifty will either reverse or it will fall down. We can blame it on the war in the Iran, in the Middle East. We can blame it on some announcement by Fed, but you would found typically the market is so intelligent that all such announcements, all such things are generally factored in. And what you see on the chart is the sum total of everything which is happening around, and we only come to know later that Nifty has fallen because of so and so reason, or it has gone up because of so and so reason. But you know those things are already factored in the market, and those things are actually developing as very strong indicators and patterns on the online charts. So if you see the charts carefully, I'm not saying by any means that technical analysis is the only thing you have to look at, but if you do it properly and see the charts well, read them well, you would find you don't have to actually listen to news, you don't have to listen to anybody else. The charts would tell you as to what kind of scenario is going to emerge. Like it is very clear that we are going to reverse from here or from here. And God forbids, if that doesn't happen, and Nifty doesn't find a support at 23,000 also, then what can happen? Just to give you a small example of that, I will come here and draw the chart head and shoulder pattern in different manner. Now let's say I do this, I go up. This is the level we're talking about when it will come somewhere here. 23,000, right? Yeah. And I'm saying it goes up, and let's say God forbids it comes down from there. So just to for better clarity, I had said earlier that currently the smaller head and shoulder which was getting formed here was giving the target at 23,000. But let's say Nifty tries to go up, cannot go up, and comes down from there. So now I have a head and shoulder which has expanded, and in this case, when I see the target and it comes down, and let's say the breakdown has happened somewhere here, right? You would find the new target will emerge, which is somewhere here. So this is very close to again some kind of support which is going to be here, and this target is reading now 19,801 on its 2000. That is the half mark of this target is going to be somewhere here, as you can see, maybe near this support somewhere, which is 21,000. So head and shoulder patterns are just indicating the target levels where Nifty can go. They are not telling you that Nifty is going to go there. These patterns are emerging out of the price action which is unfolding on the screen, on the charts, right? So they are only there to give you some indication of target levels and where the market is headed. They by any means do not tell you when a reversal is going to happen or when the Nifty is going to turn around and you can take a swing trade. For that, you have to use the strategy, the combination of, in my case, RSI, MACD, and price action, which I mentioned just now. So thank you very much. I will keep making these videos in future as well. I would like you to provide your feedback as to how you're perceiving them, whether this is helping you or not. And I am not a financial advisor, so I refrain from giving advice on buying and selling of stock or indices. So for that, you have to use your own knowledge, or you have to take the help of your financial advisor. All that I'm trying to give you is some knowledge, some understanding, some academic understanding of how the technical analysis is done. And hopefully you will learn something from here and utilize it for taking better positions in stock market. Thank you very much. Captain Singru signing off.